Wondered why a perfect trades always hits your stop loss? Check every single criteria in your trading plan. RSI looks good, the trend line is perfect. The moment you hit the buy, the market immediately crashes. Feels like the banks are watching your screen. You aren't just losing your money, you are losing your mind. You are tired of losing your hard-earned money. The truth is, your strategy is exactly what the banks uses you to trap. In this video, I am giving you the 3-step reversal framework. This is the secret the 1% hide from the public. It's how you can take those sniper entries and finally trade with the banks. So the first step in this strategy is that you have to mark the structural high and low. So in this gold chart, we are on 1 hour time frame. You can do on any time frame. So we saw that price is going down, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And recently, price made a higher high and higher low and then gave us a breakout structure. So this is a sign which tells us that trend is reversing. So now we will mark it as a bullish breakout structure. So we took a info line tool and marked it as a bullish breakout structure. And now we will shift our full focus to this point. We saw that price has gave us a bullish breakout structure which confirms us that price has been reversing. So now the second step for this strategy is after the breakout structure we will mark a point of interest. The point of interest is like supply and demand zones or order blocks in which you are gonna enter. So this point of interest should have 2 to 3 confluencers. The number 1 is it should lead to a breakout structure. Number 2, it should lead to a liquidity sweep. It should lead to a liquidity sweep. And number 3, it should be in premium and discount. So premium and discount is simply a tool called fib retracement in which you have to copy this setting. So this is our premium and discount, which is also known as fib retracement. So this is the setting which you have to copy in order to get this tool. So now this is our tool and how to market this. So catch the lowest to the highest point of the range, and now you see that anything which is above the 0.5% level is premium and anything which is below the 0.5% level is discount. So if you wanted to buy anything, you should buy in discount, and if you wanted to sell anything, you should sell in premium. So now we saw that this point of interest checks off all the criteria which have in this point of interest. Number 1, this led to a breakout structure. Number 2, it led to liquidity sweep. Number 3, it is in premium and discount range. So now our 2 criteria has been checked. So our third criteria, which is the most important and which is our entry. So now we have to wait for the mitigation of point of interest. So it has been successfully checked that price has mitigated the point of interest, and now our main part is we have to wait for a liquidity sweep. In order to get a high quality entry, we have to wait for extra confluencers, and the extra confluencers in this strategy is liquidity sweep. You can get the liquidity sweep on any point of interest. If you want more sniper entries, you can go to 15 minute or 5 minute. My recommendation is go to 15 minute. So now we are gonna shift in 15 minute time frame and see the liquidity sweep. So we came to a 50-minute point of interest, and now we saw that price has officially gave us. We wanted to wait for 2 types of inducement: push and pull. Push inducement are simply when the price is going at that direction at that point of a time. So see, when the price was going up, price has created these lows, and this is our push inducement. So price has officially swept that low, and this the first criteria has been checked, that we got a push inducement, and the pull inducement is when the price is pulling back to the point of interest and then give us a recent liquidity sweep. So we got a recent liquidity sweep here. Price came here, facilitating this pullback and making a range in which building liquidity sweep, and then price gave us a strong liquidity sweep and a good candle. So we will enter after a liquidity sweep here. This candle gave us a liquidity sweep and our stop loss will be below the candle. If you wanted to be more conservative, you can even wait for a fractal market shift on 15 minute, but if you are aggressive, you can enter after just liquidity sweep. So this candle gave us a liquidity sweep, and now we will set our stop loss below the candle. Never set your stop loss just too tight, no gap between the candle. So give it little bit of 1 to 2 pip buffer. So we gave it little buffer, and now you can set your TP 2 hour, and if you want more risk to reward ratio, you can even target the 1 hour high. So we have target 1 hour high and see how the trade move. This trade gave us about 4 hours in just 3 days. It means if you are trading with $100,000 account, if you risk 1% of it, you will make $4,000 to $5,000 in a single trade. So this is the simple strategy. If you want more strategy video like this, comment down below, and for more amazing content, subscribe to our channel. And if you want a detailed playbook or trade plan on this strategy, step-by-step PDF or Notion template, comment down below, and on next video I will give you the exact step-by-step blueprint of this strategy. And as always, plan the trade and trade the plan.